now that we're done for the day, we're going to shift gears and speak with Fraser MacLeod from Shaw and Partners about one topic that I know is dear to his heart. Good afternoon, Fraser. Thank you for joining us. I know we've talked about this topic before, but it seems to be hitting the retail chatter sites. People are getting excited about uranium.
Yeah, why not? Let's get excited about uranium. Uranium stocks are going up, and looking back over the past year and a half, we've given quite a few notes. We cover a lot of the uranium sector in terms of individual research here at Shaw's, and the calls of Michael Clark, over the uranium analyst, over the course of the last 12 to 18 months has just been fantastic. So Paladin, I think probably 14 months ago, we had a note out on Paladin when it was 10 cents. It's now trading at over 60 cents. So more than a 6 times return for Shaw's clients on that one. I think just to take it back a step, over the course of the last 10 days, we've seen some monstrous moves, and just to put a bit of analysis as to why that would be happening and is it going to continue. So stocks like Paladin are up 60% over the past 10 trading days. Again, stocks like Bannerman are up 60% over the last 10 trading days. Even the laggard in our portfolio, Boss Resources, is up 40% over the course of the last 10 trading days. So that's amazing performance. The reason behind that, obviously, these uranium producers produce uranium that goes into nuclear power stations, and there is 442 nuclear power stations in the world. It produces about 10% of the world's decarbonized baseload electricity, and there's a lot more on the way. There's another 54 nuclear power stations that are getting built, mostly by the Chinese, and demand is becoming a lot more certain. What is a lot less certain, however, is where the supply is going to come from. And Sprott, the giant resource house based out of North America, is taking advantage of that. They are actively buying the uranium spot market and driving the commodity price up. It's very illiquid, non-transparent, but gee, we are finding price discovery there, aren't we?
We sure are. And in my old economist days, we used to send all of our uranium to India. Is that still the case, do you know?
No, mostly not. The Indians do have a lot of, they have some nuclear power stations as well, but most of the future demand is going to come out of China and other Asian countries. Some of the European countries are actually, like Germany, are failing miserably in terms of their ability to meet their environmental targets, because unfortunately post Fukushima they closed down many of their nuclear power stations, and they're having to replace that with dirty coal. But the shortfall is enormous. Globally, the shortfall is about £100 million between now and 2035. Now, that's just a number, but to put that number into perspective, that would mean that the world would need 6 large uranium mines of giant scale between now and then. And at the moment, we've got 0 coming online. So the uranium price is up over 100% just within a fairly short period of time, less than the course of the last year. And when the decision around price is not really based on the price, the decision is just based on, can we actually fulfill, if we're a uranium buyer, for a utility that owns a nuclear power station, all that you've seen this movie before, all that they are concerned about is guaranteed supply. You don't spend billions of dollars in a nuclear power station and not have the fuel in order to run it. It's a very small, low amount of your total capital that you need in order to run the nuclear power station after you've built it, regardless as to where the fuel price goes. So they'll pretty much pay whatever the price is in order to get guaranteed supply. Now, they've had a great time over the past 10 years because there's been plenty of supply sloshing around, but the Sprott Fund is now challenging that. And with the price tightening up, it's looking like there is going to be a price squeeze that may continue, and that obviously is going to have a big leverage effect onto the uranium miners in terms of equity pricing.
So the 3 stocks that you said have just gone through the roof. They're going through the roof because of global demand and potentially China building uranium reactors. It's not happening here in Australia. We have almost 100% pushback here still, don't we?
Yeah, look, but that doesn't matter. It's that's a domestic political issue. In many ways, Australia, with its even in South Australia, we had an energy shutdown just a couple of years ago, where much of the South Australian population was starved of energy, and we are Many of these grids are old infrastructure running on dirty coal, and that critical infrastructure, no one wants to see the lights turn off. So it has to be replaced somehow. And these uranium miners, the miners that will go up are those that are able to restart and supply on a good price. So stocks like our preferred stock, like Paladin, has all the necessary permits in order to restart. Their all-in cost is around about $32 a pound. And that's a combination of low capex and low operational expense as well. Then you've got some other ones which maybe carry a little bit more risk and a little bit more leverage, perhaps. Stocks like Boss Resources here in South Australia, they own the Honeymoon project, which again is a potential restart quite quickly. More technical challenges there, perhaps, but the fact that it is a restart quite quickly is seeing the share price shoot up. And also Bannerman. Bannerman is a massive project, again similar to Paladin in the same geographical area, but a world-class resource if the price is able to deliver. So, and also one with fairly low technical risk. But with these sort of projects, production could ramp up really quite quickly, and even ramp up as demand grows. And that's what the market is really aware of. In that, with a price squeeze, suddenly you've got a uranium price which is going an awful lot higher, and suddenly the metrics on some of these uranium companies looking an awful lot sweeter.
So in terms of Australia meeting any sort of emissions, we do know uranium is zero emissions. Will either a state or federal government say, why don't we start a nuclear reactor program? We'll meet our emissions so much faster. But do you think the political will just isn't there?
I think it will come round eventually, when people start looking at the alternatives. We're all happy to be buying electric vehicles, but it's pointless to be running your electric vehicle on a dirty grid when you're just burning coal. So coal has to be replaced somehow. Now, wind and solar will certainly play the part, but there are many days that it's not sunny, and there are many days that it's not windy, and sometimes it's not sunny or windy. So we have to cover on those times, and the only way that we can realistically supply good baseload guaranteed electricity to much of the globe is through nuclear energy. And the world will wake up to that. It's inevitable. It's the only proven supply that we have that is able to deliver. So politically, it might some people may have to be dragged kicking and screaming, but it'll happen in the end. It just simply needs to, or the lights will turn on.
Well, given the return you've delivered to your clients, I hope more people are listening. Thank you so much for that perfect thematic there. Cheers, Fraser.
Thanks so much for having me on. Okay, cheers. Bye-bye.